Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, February the 15th. The year's 2019. Let's talk trading. Weekly wrap up. I hope you guys have been draining the banks this week. And as always, I really hope you've been doing your money and risk management. If you don't have it down by now, if you've been listening to me, say, for a couple of weeks, then I really don't know what to say because, it's just a couple of simple equations and there's no reason not to do it, especially if you want to trade like a pro. Okay. Once again, just for a weekly wrap up, all those open gaps filled. On the euro yen, we're looking here at the weekly. You can see here it's 31 pips off the low of the week. We entered the lower weekly wick zone and we shot out of it, and we actually went into the upper weekly wick zone, and then we fell back down. So there were trades out of the wick zone there. The yearly open, it seems to be really difficult for the euro yen to close above it. It's only done that a couple times. And if we look at the opening range chart here, you can see for the week we had, here was the range. Right here was the high. Here was the low, first day of the week. You can see here we tested it, we exited, we came back down, exited, and then we came back down, went through the high, went through the open day of the month right here, and we went through the opening day of the week a couple times just today, and you can see we've closed back above it. And right, once again, you can see here the month is red, and we're within that range of the first day of the month. And once again, inside bar, we were within that inside bar that happened 14 days ago on the daily, and you see what happened right here when we exited. It's a huge downside. So this week alone, you could have traded the inside bar trade once, twice, 3, 4 times. Once again, a very simple trade. And 63 pip range on the day. It's Friday. We've only got 4 over 100. And you can see here on the daily what happened when we exited out of the lower wick zone on the daily. We've had the highest open, lowest opens. You can see right here, price dipped down, came back through. Couple of great entries if you took them. We just put in that lowest open here, gave you 2 opportunities to take that, all in today. And this right here is pretty much within the New York session. So there's opportunities. Now, what's really interesting here is we didn't hit the pivot. We had a signal to go long right there, so you probably had to scratch that trade or stop out, take the reversal, pick up the pips again right here. Pro trade, if you wanted to do it, could have come out. And you can see here, once again, crossing the weekly open. Rat zone gave you a couple opportunities to go long here. Remember, you just want to put your long on, doesn't matter the trigger, but within 20 pips of the current daily low to take advantage of the rack. Once again, we missed that pivot, came back down to the weekly open, and you can see here, once again, we've got a new missed pivot. We still have the 2 from earlier this year and the 2 left over from last year. So 124.97, 98, look for price to take out that pivot, maybe next week. Price action, once again, clear signal here. You can see price went up. You could have just taken the trade at the 30, or if you waited for a green candle, it would have been at 50. You still would have made 10 pips off the trade. Okay, you can say that is a hairy hindsight trade. I'll give it to you. Wick zone, in and out. Rest is history. Oh, one signal, sometimes that's all you need for the trade to pay off. You can see here's just a bunch of chop, 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 chop. And here at the Einstein line, looks like we're having a short, only good for a pip or so. And sometimes that's all you get. And I know people say, well, if you only take 1 pip and then you have a loss, well, that's trading. The thing is, let's say you're up, I don't know, say you're up 7 pips on your first trade. Your next trade comes in and it never gives you an opportunity to take profit. It just starts going against you. Do you let it take you out at -3? Or maybe you save part of your profit. Maybe you just, scratch the trade around -2, -3. If it gets to 5, had you been taking a trade in that direction, you'd be thinking about taking profit. So maybe you cut your loss and you'd still be up 2 pips for the day. So, I mean, it's one thing to have a plan and you have it written down and you follow the plan. But then again, you have to trade in the moment. You have to trade what you see. You have to trade the market as it is evolving, as it is going. I mean, you just don't blindly follow a plan if it's obvious that on this particular trade, it's not working for you. I mean, that's just not smart, at least not in my estimation. And of course, as soon as you exit, price is going to turn around and go the other way and you're going to kick yourself. Well, you don't have a crystal ball. Price could have continued the other way and you wouldn't be kicking yourself. So don't kick yourself. The trade is over. It's over. Leave trades in the past in the past. It's that simple. Because if you bring those emotions into your trading, it's going to affect your decision making. It's going to affect your execution. And you're going to just wind up creating a mess. I mean, it's pretty much that simple. And you really don't want to create a mess. Now, once again, we look at the range here. So for the week, we had 133 pip range, for the day 63. And so if you look, let's see, let's bring this back. Whoops, there we go. So you can see here, we didn't hit the nowhere near the weekly ATR zones. We didn't hit the dailies today either. Got close, but no cigar. And these ATR zones are nice levels to trade reversals off of. That's why they are there. Oh, I had somebody ask me about the TRO dynamic fibs SR indicator and how it worked and why it worked or something like that. They wanted to learn a little bit more about it. Basically, all it does is it plots the dynamic support and resistance dots or levels, and then it puts the fib between support and resistance. And basically, the price usually is going to reverse to one or more of the fib levels. So depending on how hard price is moving one way, you'll see it bounce back the other way or retrace the other way. And that's what the fib retracements are there for. And some people, really believe in them. But if you've been following me, you know that I say there's no magic numbers. I mean, we have statistics. So, for example, open to low, we can see on the daily that open to low is usually going to be 10 or more, about what? 83% of the time, 100 minus 17. So, that's one way we use those statistics. And of course, we look at the frequency distribution of the range. Let's see, we can switch that over to daily. And so you can see here what we've got. 14% of the time it's less than 60. So what's that? What did I say that was? 16? No. 10, 14. So at 86% of the time it's 60 or higher. So you can see here we've got 60. So it's within that range. But you can see here 36% of the time it's going to range over 100. And it's just kind of nice to know those ranges. And you can see here over the last 100 days, get average range in 96, maximum 510, minimum 31, 85 bars are above the current range, 15 below, 36 was above the average range, and 61 below. See, we had that one day that really is messing things up. But, that's how we use these statistics to help us with our trading. Once again, we're looking for rats. Know that usually these wicks or tails are going to be bigger than 20, and that's why the rat zone's set at 20. So that pretty much wraps it up for the week. I hope I've answered your questions and have gotten some really nice feedback. Thank you guys. Thank you traders. It's always nice to hear kind words. Really appreciate it. Yeah, I know I still haven't sent out the 2019 donationals. It's just, I will definitely try and get them out within the next week or two before the end of the month, or people are going to forget about them. They're going to be upset with me. Anyway, that's it. I hope you had a profitable week, enjoyable week. Enjoy your weekend. And when you come back next week, just remember, it's not what you trade, it's how you trade it. And so next week, drain the banks like a pro.